Therefore, we can continue. Welcome to today's lesson. And today is a very special and a very unique day because we want to look at a special type of some accounting. I call them special because it's not a normal trading and profit and loss account, right? And therefore, it is important for us to momentarily forget what we've covered, right? So that we are able to understand these concepts that we bring in here. Now, we want to cover what we call financial statements of a manufacturing entity. I want to cover what I would call the financial statements of a manufacturing entity. Let me see whether I'm able to share this. Am I able to share this? No, but I usually don't like sharing these things so much because when I share, you people are tempted to start copying what is there. And as a result, you end up missing what is important. And remember, I don't read word for word. So I'm just trying to explain, and my explanation is not in the notes. Therefore, my explanation is very important because if you miss it, you may not get it again. And therefore, it is important for you to listen carefully. Now, if you are keen, or if you have been keen, you will notice that the two major accounts that you've dealt with are what we call trading profit and loss account and balance sheet. Now, looking at the trading profit and loss account, even looking at the name itself, tells you that it is an account that is prepared by traders, right? Account that is prepared by traders. And so far, we've been looking at what we call sole proprietorship. Sole proprietorship. And therefore, these are sole traders, right? People who have shops or their own businesses running. And they are the contributors of capital and they are the ones who manage them, right? And if you're keen on it, you also notice that what we concentrate with is, for example, we talk about sales. And sale is sale will consist of the items and goods that you sell to those people who come to buy. Finished goods, right? It's about finished goods that you sell. If you look on the other side, opening stock, and you look at the purchases, you look at the closing stock, all those elements are part of finished goods that you buy. For example, if you look at a wholesale and you have probably people from Unga Group supplying you with maize flour, right? If you have people from Unga Group supplying you with maize flour, you will be counting probably how many bales of Unga you have, they have brought, to you, that is purchases. How much you started the year with, how much you ended the year with, and how much you have sold within the year for you to be able to calculate the gross profit. That is a trading profit and loss account. But it is also important for us to try and go back. Before these people bring in these finished products, before they bring that bale of unga, there is a process in the industry that they have to undergo until they are able to produce that one bale of unga, right? And those are the people we call manufacturers. Those are the people we call manufacturers. And just to give a scenario, remember, for example, a manufacturer will set up a factory, right? They have a factory and they have, for example, they have vehicles in that factory. They may also have some offices in those factories, right? in the factories, they bring in raw materials, and the raw materials for example, unga may be maize that they buy from all over the country, sometimes outside the country, right? And then, of course, when you look at them again, you realize that they will use power to grind that maize to become flour. Probably they will add other ingredients in the process, right? They might decide, they might again use water, they might want to dry and therefore use heat, right? In a factory setting. So that by the end of it all, they are able to tell us that one packet of unga, we are selling it to the traders and to the supermarkets at 90 bob, right? So that now the supermarket sells at whatever price they want to sell to us, to the local man, right? And therefore, when you look at the normal trading profit and loss account, it does not factor in that process that the manufacturers go through before they come up with that finished product. I hope we are able to agree that up to that point. Is it agreeable? Have you understood what I'm saying? You can say a yes there if you're able to. And therefore, thank you for those people who are confirming. And therefore, apart from those people we call financial accountants, we have some other crop of accountants we call cost accountants. And these are guys who look at the process of manufacturing, look at all the inputs and all the costs that have gone into that process for them to be able to come up with the cost of those products, right? The cost of those products as finished products. And therefore, the cost of those products as finished product probably will be the cost of products for a sole trader. Remember the purchase price or the purchases that we call, whatever we call purchases? That is an accumulation of the total cost of products that have been manufactured by a producer or a manufacturer. And for them to arrive to that cost, then there is a process, and that's why we want to look at what we call manufacturing accounts. So let me share this for now so that we are able to follow. Now, I don't want to mention so many things here. Because I don't want you getting confused by all this information that is here. But it is important for us to be able to classify those costs of a manufacturing entity. And the cost of manufacturing entities can either be what we call direct material cost, and this is the cost that are incurred in acquisition of raw materials for production, right? For example, if you manufacture tables, right? You might require timber, you might require nails, you might require glue. So these three will be your raw materials, right? They come at a cost. We need to know what cost that is. Then cost classification number 2 is what we call direct labor cost. And this is the wages and salary for those people who are involved directly in this manufacturing of, for example, tables, right? And then from there, we have direct expenses. These are other incidental expenses that are incurred whenever production is taking place. Now, if you sum up direct material, direct labor cost, and direct expenses, you get something that we call prime cost. You will get something that we call prime cost. You get something that we call prime cost. you get something that you call prime cost. It is important to note that. Then, of course, we have also what we call indirect. Those are direct expenses. We also have what we call indirect manufacturing cost. And these are things like cleaners, cost for wages, cost for factory rent, depreciation of plant and equipment, right? Factory lighting, right? Such things can be classified as indirect manufacturing cost. From there, of course, we have what we call selling and administration expenses. And this will include the office rent, office electricity, depreciation of office machinery. Remember now, we will be differentiating this depreciation from the one that we are used to. Because the one that we are used to, for example, if we have two vehicles, if you have two vehicles, and one is distributing finished product and the other one is bringing in raw materials, the one that is bringing raw materials, depreciation will go to the manufacturing account. The one that is doing the sale and distribution of finished product, depreciation will go to the normal trading and profit and loss account. So I hope that is clear. I hope this demarcation of cost is very clear. So that even in manufacturing, we have carriage inward, we have carriage outwards, right? We have carriage inwards and outwards because we are talking about expenses that we incur or manufacturing entities incur in bringing in raw materials or in carrying them out, right? And therefore, it is important for us to be able to note that. Remember, again here, we follow a certain format, which is I want us to be able to see that, right? I want us to be able to see. I hope you are able to see what I have shared here. I hope you are able to see what I've shared here. I hope you are able to hear me. And I hope that you're able to get what I've shared here. And therefore, this is the way a manufacturing account will look like. Of course, it starts with the name of the business. In this case, we have what? We have XYZ Limited manufacturing account for the year ended. You put in a date there, right? 31st December 2019, or whatever date you've been given. And manufacturing account will start with what we call opening stock, lakini ya raw materials. Can you see that? This is different from the normal opening stock of a trading profit and loss account. The one for trading and loss account is usually assumed it is for a finished product. Here we are talking about raw materials. And therefore we start with the opening stock of raw materials, right? Then we add purchased raw materials again. I hope you can see we are dealing with the raw materials. Then carriage for raw materials again. Then we less return outwards for raw materials again, for us to be able to know the cost of materials available for production. Then from there we less closing stock of what? Raw materials again, for us to be able to get the cost of raw materials used. From there, we will add what we call direct labor and then direct expenses for us to be able to get the prime cost. Now, if you look at this particular part, if you look at this first part here, this particular part here, it is not different from what we are used to. It's only that in this case, what we are dealing with is opening stock, for example, of raw materials. And remember, in a question, these things will be mixed up because many a times you'll be required to prepare both a manufacturing account. Then once you prepare a manufacturing account, you proceed and prepare a trading profit and loss account. I hope this is clear, right? Up to the prime cost. Then after the prime cost, remember we have said these are all direct costs that we have covered so far. From there, anybody asking? And there I'm shouting, my friend. No, Thomas, I always post notes in the portal. I cannot forget to do that. My voice is breaking. Oh my. How am I gonna do this now? Why is my voice breaking? I want to restart this class. I don't want to. My voice is okay now. So they check net on their side. I was worried that none of you is able to hear me. Good. So we continue then from the prime cost here. And you see, now I told you the good thing about accounting, we have format. So as long as you get this format right, these are the things you just feed them in, right? Feed them in, feed them in. And they are usually there on the question papers. And therefore, it is not a big deal. Then from there, after we get the prime cost, then we add all the indirect manufacturing cost. And this will include indirect labor, indirect expenses, heating expenses, lighting expenses, depreciation, but on the factory equipment. Here we don't add depreciation on, for example, van that was used for selling and distribution, right? We don't add depreciation for, office equipment. It is factory. It must be things that are helping us in manufacturing of the product. Then we add factory salaries. If you again note, it is factory salaries and not the normal salaries. Then we have factory rent and not the normal rent. Once we add them all together, we will get what we call total indirect expenses there, right? And once it is added, once we are able to add them, then we'll get a figure, which again we add what? In which we add total indirect, sorry, we add the opening work in progress. Remember, I want to mention something here. Remember, for a manufacturing entity, it takes time before raw material is transformed into a product, a complete product or a finished product. And therefore, you expect that sometimes before at the end of the year, sometimes at the end of the year, we may have some stock of raw materials that we have never utilized, right? We may have also some stock of some goods that are in between raw materials and finished product. Those products that are still being worked on are what we are calling work in progress. And therefore, we need to add opening work in progress, the one that we had at the beginning of the year. And then we less the closing stock of that work in progress, again, for us to be able to get what we call total cost of production for goods that have completed. Total cost of production for goods that have been completed. From there, we'll add what we call manufacturing gross profit, manufacturing cost or gross profit, for us to be able to know what we have termed there as finished goods at transferred price. This is the price, or this is the amount that we refer to as purchases, right? And therefore, in the place of purchases in the trading profit and loss account, this is the amount that will go there. It is the amount that will go to the trading profit and loss account. I want to know whether that is well understood or whether there is any quick question that I need to address at this point. Anything that I need to address, a quick thing I need to address at this point? None. And therefore, I want us to go to the next step and try out an example, right? We try out an example so that we know how it works, right? Good. Thank you. Thank you. It's good. It is always good when you understand. right? It's always good when you understand. Now, before we go there, I want to mention this. This now again is the normal trading, the profit and loss account, the way you know it: sales less cost of sales, opening stock. Then from opening stock, we add the purchases, right? But here we said instead now of adding purchases for this type of accounts, instead of adding purchases here, the cost that we add there is the cost that is at the bottom here: finished goods at transferred price. That is the element that comes where? In this place where we usually put what? Purchases. It is good that we do it practically for us to be able to understand. I want to refer us to Sit Mboya Mark. What we start with. Let me see. Let me see what we start with here. The case for Mboya Mark. Yeah, we can do the Mboya Mark, right? Let us do the Mboya Mark. Mboya Mark. Therefore, you can get that from your work. You can get that from the example that I already gave. Yeah, so that is the one that we start with. That is the one that we will start with. That is the one that we will start with. Hey, friends, I hope you have that question now, right? Do you have the question? Do you have the question? Some of you start saying, hey, we never saw the question. Hey, we never shared it. There are those who are giving excuses. Yeah. Mwalimu, you never shared that. Yeah. I see there are people who are not able to access their portals. My friends, if you don't sort out that thing, you'll miss out on your exams. And I'm very sure exams are around the corner. Don't wait and rush the last minute. It will not help you. Call HOD, even if it means 5 times a day. Call other numbers that you've been given until you get sorted. Otherwise, it can give you a lot of headache. A lot of headache. I therefore want to hope that we have that question. And let me put this here so that I share this screen so that we work it out together. I like it when we work it out together because some of you think that good, we can continue. Now. Remember, we said that we always start with what? The heading of the account. That's why I've written Mboya Limited manufacturing account for the year ended 31st December 2012. And therefore, I expect you to be very fast when you're giving me those figures. Now, if you look at those figures, the ones that have been given for Mboya, I want to hope that we are there so that we spend the least time possible for us. You will notice that one, there is opening inventory as at 1st January, right? We have raw materials, work in progress, and finished goods. So all of them have what we call opening stock, right? Or inventory. Then from there, we have purchases of raw materials, carriage of raw materials, direct labor, and all those cost proceeds to the end. And therefore here, if you look at the format that we have, and are you able to see my Excel? Kindly confirm if you're able to see my Excel. Good. Then we can proceed. So we start with opening stock of raw materials. What is the opening stock of raw materials? Someone to give us the figure. Someone to give us the figure. Opening stock of raw materials. Can someone give us the figure? Opening stock of raw materials. Give us the figures. Someone give us the figure 1270, right? So we can put 30 here as a 1270, right? 1270. Then from there we add purchases, but purchase of raw materials. Someone to give us the cost of purchased raw materials. Cost of purchased raw materials. Good. 4576, 750. Carriage inward, any carriage inward, any carriage inwards, any carriage inwards, any carriage inwards. Someone to give us carriage inwards. 98, thank you. 98, and therefore that should give us a cost of what? Other elements they are not indicated. That's why I'm concise here. Remember, it is just like the trading. If an element is not there in the normal format, you do away with it. You don't have to include it there. And therefore, the cost of materials available for production is 5944 750. Do we have closing stock of raw materials? Do we have closing stock of raw materials? Someone to give us the figure, closing stock of raw materials. We have closing stock of raw materials. 1445. Now I know some of you are looking for that figure. Where do you get it? You get it in the additional information down there, 1445. And therefore, if we less that, what do we get? What do we get? 4499 750. 4499 750. We can put that figure somewhere there. We can actually, let me put it 4499 750. It is the cost of raw materials that we have used in this process of production. Then from there we add direct costs. No, direct labor. We add direct labor. What is the value of direct labor from the information that we have? Very fast, someone to give us the value of direct labor. Value of direct labor. What is the value of direct labor? 4210, thank you. 4210, 400. And therefore, when we add that there, we'll get 8710, 150, which, as you have seen on this other side, I've called prime cost. I have called prime cost. Remember, whenever we are marking, this would be a good point to mark. Because if you don't get the prime cost, it means that you've messed up, right? It would mean that you've messed up. And therefore, your marks will be limited if you have to get any. Then from there, we look at indirect manufacturing costs. And the indirect manufacturing cost, one, we have depreciation of machinery. If you look at the notes, if you look the additional information there, what have we been told about depreciation? Is there anything affecting depreciation in the additional information? No. Is there? No. But if you look at the information that we have there, we have what we call depreciation expense for machinery. And you see that? Depreciation expense for the machinery. And the assumption here is that these machineries are the ones that are being used for production of these products. And therefore, the amount is 510. And you see that? I hope we are able to see that, 510. What other costs are there? Electricity, 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 221. Do we have any additional information affecting that? Do we have, is it, now I want you to decide, is it 221 or is it 406? Can you decide, is it 221 or 406? Very fast, very fast. There are those who are giving me 221. Others are giving me 406. Which is which? Which is which? I want you to reason out from what I've explained to you. Which is which? We are dealing with a factory, and therefore our electricity cost here will be 406. You can see that from the information that is given there. This other 221 should be affecting the normal trading profit and loss account. That's why I said sometimes these items should be given there, all of them lumped together. It is for you to decide and to know which one is supposed to go to the manufacturing and which one is supposed to go to the trading profit and loss account. And therefore, in this case, we have 406. That is the factory cost of electricity. Next, we have factory rent. Factory rent. Factory rent. If you look at the rent there, it is classified as 260, right? But there is a note. There is a note in the additional information. What have we been told about the rent? There is something that we've been told about the rent, right? There is something that we've been told about the rent. Total rent is, was it 206? 260. Total rent is 260, right? But we have been told that we must apportion it so that it is 3 to 1, right? What that means is that for the factory, let me put this here. Factory, right? And then we have, the other one is office, the normal office. We've been told to use a ratio of 3:1. What that means is that for the factory, it will be 3/4. And for the office, it will be 1/4. Do you see that? What have we done here? Customize text. We have 3/4. And then we have 1. What is happening? 1/4. So for the factory, 3/4 times 260, 3/4 multiplied by 260, and sorry, 260,000. Need to put that into perspective. And this other one for the office, it will be 1/4 multiplied by 260,000. What do we get? What do we get, good people? The one for the factory is 195,000. And the other one is 65. Good. Therefore, here for the factory cost, that is the amount that we bring there, 195,000. 195,000. Any other cost affecting the office, affecting the factory? Any other cost affecting the factory? Is there any other cost affecting the factory? Any other cost affecting the factory at this moment? Kindly confirm. Very fast, very fast. Time is running, it's not on our side. Any other cost? Can you confirm from the information that you have, is there any other cost that is affecting the factory? No. And therefore we can add that up. Once we add that up, what do we get? 11, 11. True or false? We add it to the prime cost for us to be able to get what? The cost of production. The cost of production, which is 98, 21, 150, right? That is the cost that we have spent to try and convert the raw materials that we have into finished product. However, you should also note that there are those products that were not complete at the beginning of production, at the beginning of the year, and there are those that will not be complete at the end of the year. That's why we are saying the next step there is to add opening work in progress. So can somebody confirm to us what the opening work in progress amount is from this example? Someone confirm to us what the opening work in progress is from this example. Thank you, Emmanuel. 1555, right? 1555, 1555. Then we less closing work in progress. And what will be the closing work in progress? You should be able to get it from the additional information. From the additional information. So what do you get? What do you get there? It's 123 or 1230. So less 1230 minus 1230. And therefore, again, if you do your summation there, you should be able to get 10,146, 150 as the total cost of production for completed goods, right? Yes. Then from there is what we call manufacturing profit. What have we been told about the profit? There should be some additional information there concerning the profit. What have we been told? That finished goods are transferred from factory to sales at a markup of 20%. What does that mean? We add the markup is what is markup? Because now here you will need to be very keen. We have two items there, markup, and we have what else? Margin. Is it margin? Markup and margin. We've already seen this. Markup will be profit over cost of sales, right? Whereas margin is profit divided by sales, right? Divided by sales. And therefore, it will depend with what you've been given. Now, markup here, we've been told it is profit divided by the cost, right? And therefore, we are looking at 20%, 20% of the cost, which is 10,146, 150. 10,146, 150. So what is 20% of that? Someone to give us the figure? Someone to give us the figure? 20% of that, do you get? 202,9230, right? 202,9230. 202,9230. And therefore, once you get that, then you add. For you to be able to get what we called finished goods at transfer price. Finished goods at transfer price will be 12 million 100 and 12 million 175 380. I hope we are together up to that point. I hope we are together up to that point. Good. From there, once you are through now with the manufacturing, because now that is manufacturing account, that becomes what we call manufacturing account. Once you are through with that manufacturing account, the second part of the question was asking us to prepare what? Let me confirm. It was asking us to prepare the income statement, or what we call profit and loss account, right? We prepare income statement, or what we call the profit and loss account. And that's why now we have the next step as preparing Boya Mark Limited trading profit and loss account for the year ended there. So here, this is the normal one now. Here we'll start with the sales. What is the amount of sales? What is the amount of sales? Someone to give us the amount of sales. Very fast. You people are accountants. You should be able to identify these figures now without much problems. You should be able to identify them within the shortest time possible. You should be able to identify them. The figure is 15, I write it there, 15, 931, 100. Thank you. Then we less cost of sale. Here we've not been given net return out, return in, and therefore we go to the next item, which is the less of cost of sales. And therefore we start with the opening stock. What is the opening stock? Opening stock here, what will it be? Someone identify the opening stock for us. Someone identify the opening stock for us. Very, very fast. Very, very fast. No, you're taking us back. Why are we using what? What have we used? 14, 14, 61, 50. What is that? Or I made a mistake here. It's 10, 14. No, that is it. A small item. If you apply 14, 14, you will get a very different figure from 2029. So the figure we are using is the one that is up there, 10, 146, 10, 146, 150. So someone identify the opening stock for us. Opening stock, remember this is a normal trading profit and loss account. And therefore, the opening stock will be for the finished goods. So can we look for the opening stock of finished goods? Thank you, 1163, you're right. So 1163. Then we add cost of finished goods transferred. Cost of finished goods transferred. Someone give us the cost of the finished goods that were transferred. Cost of finished goods transferred. Very fast, very fast. Very fast. Very fast. 1442, no. What is it, Manuel? Have we lost you? Who are these? This is Irungu, Okumu, Atika, Christabel. You're very right. You've remembered that this is the figure that we were talking about. This is the figure that we were talking about, because this figure here, the one that I've put an asterisk, should be the same as that figure there, right? And therefore here, It is 12, 175, 380. Very good. Very good. This one, if we add them up, they should be able to give us the cost of goods available for sale. Cost of goods available for sale. From there, we less what? Closing stock. What is our closing stock? Someone to give us a figure? What is our closing stock? What is our closing stock? Remember, we said you should be very keen to know what closing stock you're dealing with. And in this case, it is the closing stock of finished goods, which is 1442. Thank you. Who is this? Chepkoech na Shikuku na Johnny Munyorok. Munyorok ama ni Munyoroki. Don't worry about the name. Even when I pronounce it in the wrong pronunciation, you understand me, right? Understand where I come from. Yeah, we're here to learn. We overlook some of these things. Good. And therefore, if we subtract that, we'll get a figure that we call cost of sales, and that will be 11,896, 380. 11, right? Am I right? 11,896, 380. Is that the figure that we get? Is it the figure that we get? It should be. Good. And therefore, when we less that from the sales, because here we say this is equals to sales minus this cost of sales that we have there, then we have a gross profit of 40,34,720. 40,34,720. You can confirm that. From there, the next item in the trading profit and loss account is to less the expenses. We less the expenses, right? And the expenses will start with the rent. Remember the rent that we calculated? What amount of rent comes here? It is the rent for the office. The rent for the office. And what was the amount? Someone remind us? What was the amount? 65. Thank you. Thank you. Thank you, Aradi, Rongo, and Fadili. 65,000. You are good people. You are good people. Depreciation on office equipment. Did we have depreciation on office equipment? Did we? Depreciation on office equipment. Do we have it somewhere? And what is the amount? Depreciation, there was one depreciation on machine, and number two, we have a, let me see, depreciation on equipment. Depreciation on the equipment. What is the amount? See where we have equipment for office. That is supposed to be under depreciation. It is supposed to be under depreciation. Therefore, 115,000. Good. Do you have office salaries? Do we have office salaries? What is the amount? 1670, 950. 1670, 950. Office electricity. Office electricity. Office electricity to 21,000. Thank you, Waidi Yegani. Chepkoech again. Any other cost that should go to the trading profit and loss account? Any other cost that you think should go there? Any other cost that you think should go there? Any other cost that you think should go there? Any other cost? Can you scan the information that you've been given and tell me whether there is any other cost that should be included here? Is there any other cost? No. Rent, what rent are we talking about? Do you have rent? Rent we've already included. What rent are you talking about, Onesimus? Rent is our first item here. Can you see it? Can you see this rent? Yes? Do you see that element there? That is the rent. Onesimus. What are you saying? That gross profit is what? Gitonga Jacqueline. I am losing you. I am losing you, Gitonga. Why are you adding this figure? Why would you add sales to the cost of sales? Why would you add sales to the cost of sales? Gitonga. Gross profit is equals to sales minus this cost of sales. It is not an addition. It's supposed to be a subtraction between these two figures. So 59.1 minus 11,896. It should give us the gross profit of 4 million. Should give us the gross profit of 4 million. I don't see any other expense. Rent is already included there. I don't see any other expense, and therefore we can total the amount that we have here. What do we get? What do we get? What is the total there? $20,71,950. And therefore the net profit again here becomes what? Becomes gross profit minus total expenses there. To get what? 1962. 1962, 770. 1962, 770. Is that well understood? Are we all on the same page? Is that well understood, and are we all on the same page? Confirm whether it is well understood. Well understood. I need a confirmation from many of you. Thank you. Thank you. Now, I want us to try and cover a complex one, a more complex one. We might not, hey, Atika, Tekra, we might not be able to go there. Might not be able to go there. These markups are things that you've already done in secondary schools, right? The markup makeup thing. These are already done somewhere else, right? Therefore, we said markup is what? Profit over cost of sales. Margin is what? Profit over sales. For example, look at it this way. Look at it this way. If we did sales, let me put this here. If we did sales worth 100, right? And our expenses are the cost of sales, cost that we've incurred to get that sales is equals to 80, right? It means that our gross profit will be this sales minus the expenses, which is 20. Do we agree on that? And therefore, if you are told to prepare markup will be, we have said it will be profit over cost of sales. So in this case, it will be 20, which is the gross profit, divided by cost of sales, which is 80, of course, multiplied by 100, right? And margin will be gross profit or profit, which is 20, divided by the sales, which were 100, of course, multiplied by 100. So what would you get as the percentages here? What did you get? Here you will get 25%, and here you will get what? 20%. So those two are different. Markup and margin are different, and therefore it will depend with what you've been told was the manufacturing gross profit. Was it based on sales or was it based on cost of sales? Was it a margin or a markup? That should be very clear. Now I need a breather. I need to take a break, a short break. How many minutes? How many minutes? How many minutes? How many minutes? Let me see. I'm trying to look at the most complex one that we have here so that we try and digest it. We try and digest. Which is the most complex? Do we try and tackle Carol and Mary? Yes. Carol and Mary. Carol and Mary. And therefore, the TPL format. No. Immediately, Tracy, you cannot take us to trading profit and loss account again. No, I refuse that. You cannot take us to, you already have the format. Why do you want us to go there? Why do you want us to go there again? to redo the trading profit and loss, and you have a better format than this. We're just using this because these are the items that we have. These are the items that we have. We won't go back there. So you're saying we tackle example number 2 or number 3? Illustration number 1. We have a class exercise number 2. Number 2 is on Kate and Robert. And others want illustration number 3. Number 3 is on number 3 is on what? 2 or 3? How many questions do you have? Do we have one for Carol and Mary? Do we have one for Carol and Mary? That is number 3. And you have the one for, the other one is for Kate and Robert. So which one do you want us to tackle? Carol and Mary. Good. So can you go through that question so that we, when I come back, 5 minutes break, we proceed and tackle it. See where we can reach. Can we proceed? Good. So for Carol and Mary, I hope you have digested that information well, so that we are able to move very fast, right? I hope you've digested it well so that we are able to move very fast. What do we have here? So Carol and Mary. I hope you are able to see my Excel, right? Manufacturing account. What are the dates? That 1st December 2013, right? And here we move very fast. We move very fast. What is the opening stock of raw materials? Very fast. Oh yeah, we can call it that name. We can call it Carol and Mary. Opening stock. Can you give me these figures very fast? And then for ease of calculations, can also put this in form of, so I think, no, let me put it here, shillings, 1,000, right? Shillings, 1,000. Good, 23, can put it here as 2,300, right? We continue. What are the purchases of raw materials? Purchases of raw materials, very fast. Purchases of raw materials, 14,590. Ensure that we don't lose you here. You'd be very fast. That is what would be expected of you in the exams. Good. What else do we have? Do we have carriage inwards? No. What is the other element we have? This one can be added to get 16,980. 16,980. From there, what do you have? Return out. Nope. Do we have that? No. So we continue. Closing stock. What is the closing stock? Call this. It even seems like it is simpler than the other one. Closing stock. What is a closing stock? Somebody is saying no. Closing stock, 1,900. Can you see that? Can you see it? Thank you. To get what? 14,990. 14,990. That's the cost of raw materials used. From there we add what? From there we add what? Indirect factory costs. Do we have direct labor? Do you have direct labor? Direct labor? What is the amount of direct labor? Direct labor? We don't have. Therefore, we continue. Therefore, that means that still becomes our prime cost, right? 14,990 is our prime cost here. It becomes our prime cost. It becomes our prime cost. Good. Indirect manufacturing cost, indirect factory cost, indirect manufacturing cost. What do we have? Do we have general expenses? Can you see it? Or should we even add it there? General expenses. Good people. General expenses, what do we have for the factory? This is the general expenses for the factory, should be there. Because we are dealing with the manufacturing account. What is the figure? General expenses for the factory. 7730. Good, we proceed. What else do we have? What else do we have? Factory wages. Are you misleading me? $76.30. 76.30. 76.30. That is factory wages, eh? Next item. Next item that we can find for the factory. Next item for the factory. We have depreciation. We have depreciation. 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 What do we have? Depreciation. We have one for the factory building and the other one for plant. Factory building. Someone should be through calculating this. And the other one is for plant. Depreciation are twofold. Sorry, one for the factory. 5870. How come? Now, if you look at the information that you've been given there, you've been told that factory building at cost is 2,400. Factory building, right? We have at cost there. It's not fit, right? And the cost is 2,400, if I'm not wrong, right? But we've been told that there is an accumulated depreciation, right? There is accumulated depreciation, which means these are depreciation for the last years, which is 15,370, right? 15,370. And therefore, as we begin the year, the book value was supposed to be 50,30. The book value was supposed to be 50,30 at the beginning of the year, right? So depreciation for this year will be, what is the percentage that we are charging? Very fast. Give me the percentage. Factory building is 2%. You see that? From additional information number 7. For this, it is 2%, right? And therefore, depreciation that we are concerned with for this year will be 2% of the amount of the net book value at the beginning of the year. So 2% of 50/30 gives us what? It gives us what? Someone. What is 2% of 50/30? 100.6. And therefore, that is the amount that we bring in there, right? 100.6. 100.6. So we proceed for the plant. For the plant, what was the depreciation? What was the value? What was the value? The value is the plant at cost is 17,220. 17,220. Then what else have we been told? Provisions at first January 2013. Provision as at 1st January 2013 is 20. No, accumulated depreciation is 5870. Can you see that? Why is somebody giving me 1135? What is 1135? Can we move together? What is the depreciation as at accumulated depreciation of plant was 5870. 5870. Therefore, the net book value was supposed to be 11,350. 11,350. And we are charging depreciation at what rate for the plant? 10%. Therefore, depreciation for the year, current year, will be given by 10% multiplied by 11,350 to get us what? 1135. And therefore, that is the amount we put there. That is the amount that we put there. Next. Next. Which other cost do we have apart from depreciation? Any other cost that we need to factor in? Any other cost that we need to factor in? Any other cost? Good people. You're not telling me something. Attention here, please. Attention here. Yes, Diana, what do you want to say? No, we cannot put delivery van because that is for delivering finished goods. They should go to the trading profit and loss account. Diana, what is Diana saying? You raised your hand. Now, some rectification, please. I want to rectify something. You're not telling me, if you read note number 7, note number 7 is saying that depreciation is to be provided on cost. It is on cost. The way we have done it here is in the normal way, how you are supposed to account for it. But now, here, depreciation will not even consider what we are calling accumulated, right? We will not have to consider what we are calling accumulated. Sorry for this. I had not read that part accurately, right? Therefore, we are back to where we are. We have been told, if you're told it is on cost, it means that it is 2% on the initial cost. You understand that? It should be 2% on initial cost. But if that is not, you've not been told on cost, then you should do it the way we have done it. We had done it before. But now that you've been told it is on cost, this one should be 2% of 2,400 is equals to 2% multiplied by 2,400. Sorry for that, 2,400. It should be 408. It should be 408. It should be 408. And the same case for this other one. We've been told that it is 10% on cost. And therefore 10% of that is 1722. Kindly rectify here. 408, right? 1722. I hope that is clear. Now, those people who are raising hand, can you put it somewhere there on the public so that I know what your thoughts are or what you're saying? Now, there are people who are telling me delivery van. Was delivery van used to bring raw materials into the factory? Yes. Was it used? Have we been told that it was used? What about rent and rates? What have we been told about rent and rates? Anything on rent and rates? Oh, nothing on rent and rates. Let me see. Let me see what we have here. Let me see what we have here. What have we been told about rent and rates? What have we been told on rents and rates? You people have messed me up. There are some things we have not factored here. You are not telling me you have additional information notes on these items. You should be able to point them out. That will take me back to general expenses. Do you see where general expenses is? From the information of the trial balance, we've been told that the general expenses on factory was 7730. True or false? But do we have additional information? Do you have additional information? Very fast. Do you have additional information? What is it saying? Number 5. Additional information number 5. What is it saying about general expenses? That there were accrued general expenses of 17 what? 48 in regard to the factory. Do you see that? What did you say about accrued? What did you say about accrued? What did you say about accrued? We add it to What you already have, what we subtract? It's an accrued expenses. We add. Thank you. Who is this? Emmanuel Martin. We said we added 1748. So can you give me those two? Can you give me those two? What will be the total? What will be the total of those two? What will be the total of those two? Very fast. Is it 9478? 9478. True or false? Look at the factory. Look at the factory wages. Factory wages, and you tell me whether we have additional information on it. That one doesn't have any additional information, and therefore it is important that you are able to revisit the additional information so that you tell me where we are getting it. We are also getting it wrong. So we proceed with our workings here. Any other indirect expenses? Any other? Then we can add this. If there is no other affecting the factory, we can add those. No, note number 6. What about note number 6? Note number 6. What is the amount of rent and rates? Has it been given in the trial balance? Has it been given in the trial balance? I'm talking about the trial balance. It is not given, right? And therefore, if it is not given, we can, I tend to think we can ignore that and assume that it was an error because they are supposed to have given it there. They are supposed to have given it there, right? Let us see this. This is 19 to 38. The total is 19 to 38. So hold on number 6 a little bit. We'll come to 8 later. I'll define how you can go about it. So once we get that, once we get this, once we get that, we have prime cost and we have indirect cost. We add these two, right? When we add them, what we get? 34 to 28 as the gross cost of production. Gross cost of production, or total cost of production. Factory gross cost. We call it gross cost of production. You can see the technicalities involved here, right? From there, what did we say? You are supposed to remember that you add work in progress at the start, right? And therefore, you add work in progress, opening work in progress, right? And you less closing work in progress. So what was the opening work in progress? Someone? What was the opening work in progress? Those figures are there. Very fast, those figures are there. Opening work in progress, 2210. Thank you. 2210. What was the closing work in progress? Closing work in progress. Someone identify the closing work in progress very fast. We say that you get that from the additional information, 2880. Thank you, Gisheo. Sit Gisheo and Shikuku and Batin. Sit Martin or Batin? Mani Batin. 2880, you less. And therefore, when you less that, you will get a figure of 33,558 as the cost of production. You can simply call that total cost of production. Cost of production. Can call that cost of production, right? Again there. From there, what have we been told on the profit? Manufacturing profit? Add manufacturing profit. Have we been told there was a manufacturing profit? Manufacturing profit? Good people, you're not responding. Is it becoming difficult? Oh, I hope not. Amount of manufacturing profit. How do you calculate manufacturing profit? Yes, we've been told it is 25% of. Let me see. Manufacturing based on the transfer price to the warehouse. 10% of the trading gross profit. So here we are looking at 25% of manufacturing profit. 25%. 25%. Can you calculate that? And give me the figure. Calculate that and give me the figure. What is the figure? What is that figure? My friends, go to working number. Go to working number 1. Additional information number 1. What does it say? That during the year ended 31st, 16,777 handbags were transferred to the warehouse at a cost of 2,400. And therefore, with that, we should be able to know what we are calling the cost of, or the transfer price. Simply, the transfer price, or the price at the end of it, the should be up here. The price which we used here. Remember that where we had put asterisk. The price at which we transferred our items, we've been told that we had 24, we had 727 handbags that were complete, and they were transferred at a price of 2,400. So multiply by 2,400, you tell me what you get. 16,727 multiplied by 2,400. What do you get? What do you get? Good. 144.8. 40. Remember, we have what? We have this one in thousands. So it will become 40. I need to put this into perspective. 4144. So what will be the manufacturing profit? What will be the manufacturing profit? It will be the difference between these two, right? Is equals to this one minus this. So it is just a technicality. It is just a technicality that you're supposed to be keen on to know what they are telling you. And therefore, that can be sorted out that way so that we have our transfer price there already because it has been given in terms of goods. It has been given in terms of goods that we have. Is that clear? Somebody tells me it is clear. Someone tells me it is clear. That is manufacturing what? That is manufacturing what? Accounts. Manufacturing account. And we are through with the manufacturing account there. So the next step is to address the second question, right? Or do we have a question on manufacturing? Do we have a question on manufacturing that I need to address? Very fast, 1 minute before we embark on Attica. What is this 1964 you're giving us here? What is that 19664 you're giving us? 1 and 3 of additional information. All handbags are to be sold at 32. We are not looking at the selling. We are hatujafika kuuza bwana. 25% will be affecting the partners' accounts. Remember, the 25% of the manufacturing profit would be 25% of what you've gotten here. I hope that is clear. I hope that is clear. Note 3 is good. People, are we still together? I think there was some issue with network. Confirm that you're able to hear me. Confirm that you're able to hear me. Ekal Akomwa. Ekal Akomwa. Confirm that you're able to hear me so that we proceed. Loud and clear. Thank you. Thank you. I was asking if there is any question. The 25%, we've been told that 25%, this is beyond you. Just take it away. Let it be there because there is what we call partnership accounts that you will cover later on. But now this 25% is supposed to, 25% of the manufacturing profit of what you've calculated there as manufacturing profit should be paid to this one partner directly. So let that be. Good. So can we proceed to the trading profit and loss account and see whether we'll be able to complete it? We proceed to trading profit and loss account and see whether we'll be able to complete. Let me share this. We are here, right? This is right where we are. What we have here, let me try and draw this. Draw this line. Oh my. My pen is not working. Why are you not working? Drawing. Close the network. Good. Now we can proceed. We can proceed, and we need to do this very, very, very fast because of the limitation of time. Because of time limitation. So we proceed. What is the first item for sales? First item for sales, for trading profit and loss account is sales, right? And what is the amount of sales? Amount of sales. What is the amount of sales? Amount of sales. How did you get that, my friend? 63,200. Or is it given there? Probably it is given there. Have I even looked at it? No. Let me see the question. Do we have sales? Yes, we have sales 63,200. Then what is the next item? Do we have return in? Do we have return in? We less return in ones. Do we have return in? And what is the amount? 112. 112. Good. What else? We should be able to get what here? A certain figure as our net sales. Net sales. We can call that net sales. We call net sales. Next. Next, what do we have? We less cost of sales. You need to be very keen. You need to be very keen. And therefore, here we want to calculate that cost of sales. And the calculating cost of sales begin with opening inventory or stock. Opening inventory. What was the amount of opening inventory? Very fast. Very fast. Opening inventory. 2,500. I think I have some very bright student here. 2,500. Then we add what? We add what? Purchases. Or we add we add the cost of finished goods. Cost of finished goods or purchases. What is the amount? What is the amount? You have forgotten. 4144. 4144.8. George, where are you getting 1742? Oh my. This is the cost of products, cost of finished goods. This item here. Can you see this item here? The one that we put an asterisk. The one that we marked there. Can you see it? Can you remember that item that we said should always come there? It is this item, your end item here. That last item there is the one that we add here as our purchases, because it shows the figure at which these goods were produced or figure at which they sold them to us. So 14,144. Can you see that? So if we add these two, what do you get? You will get 6644.8. From there, then you less what? You less what? Closing stock. Have I lost you people? Are you still here? Are you still here? What is the amount of closing stock? What is the amount of closing stock? Good. So we put in 17,428.8. 17,428.8. Thank you. So if we put in that, what do you get? Our cost of sales, should be 43 to 16. 43 to 16. Do you agree with me? And therefore, if that is our cost of sales, then our gross profit will be the net sales minus the cost of sales, for us to get 19,872. 19,872. Now, some of you are too silent now. What's happening? You able to follow the figures? Are you able to follow my figures? Yes. Remember, this is just it's a bit complex, eh? It's a bit complex. And I wanted us to have the two types, one that is simple and this other one that is a bit complex that you require to think, right? But of course, in exam, if I bring this, you people, you will not even finish one question. You don't expect a very complex, right? But it is good to be prepared. Remember, you're doing accounting for the rest of your life. So even if you don't meet it here, you'll meet it in CPAs and the rest of the places. And some of you will be employed as a cost accountants, yeah, in some of these big companies, Unga Group, and the rest of them that deals with manufacturing. So it is good to be armed and prepared. Now, from the gross profit you have there, do we have my math is wrong? What are we doing? What are we doing here? Why is my math wrong? Can someone tell me why my math is wrong? Instead of just telling me my math is wrong, you tell me I've made a mistake. I am willing to learn. I am not a know-it-all. If I've made a mistake, I will rectify it immediately and apologize. Yeah. So mtengie, ni mtengu ama ni mtengie? Mtengie, mtengie. Forgive me if I pronounce it wrong. Where am I wrong? Come loud and clear very fast. Mutengie, very fast. Anyone else who think I am wrong? Anyone else who think I am wrong? Yes? Mutengie is not saying anything. So we proceed. We proceed. Thank you, Miriti. Thank you, Miriti, for confirming that my math is right. Right? So, Mutengie, kindly relook at your work and see what we have done. It should be apparent. So any other income that we should add on the point 4144.8? Why is it wrong? What was our finished goods? What was the cost? Isn't it this one here? The one that I highlighted here, 4144.8. 4144.8. What is the issue? My friend, come around. We continue. Yeah, let us continue. Let us continue. So gross profit, anything else that we are adding? Any additional income? Any additional income? I am not seeing any from the TB, but it is important to look at this other what? Additional information. It's always good to look at the additional information to see whether there is anything that will affect the profit. Look at number 4. What does number 4 tell us? That the allowance for doubtful debt is to be maintained at 5 of the trade receivable, right? So current, what are the provision for doubtful debts? Very fast. What have we been given? What have we been given as allowances for doubtful debts? 770. I need you people on board. Allowance for doubtful debt is 770, right? So we have new provision. I remember I taught you this. New provision is to be maintained at 5% of the debtors or trade receivables. So what was the amount of debtors or trade receivables? Very fast. Somebody give us the figure. Debtors, trade receivables, 10,680. So multiply by 10,680. What is the figure that you get? What is the figure that you get? You're getting a figure of 534, right? That is where we are supposed to maintain them. What about the old provision or the current provision? Old provisions. Old provisions were at what figure? You should be able to get it from the TB. Allowance for doubtful debts was 770. Do you see that? Thank you, keep quiet. This is provisions we are dealing with. Remember the workings that I was telling you? Provisions for doubtful debts. Provisions for doubtful debts. These are workings. Therefore, we can call this workings. And this can be working number 1, right? So this is, they used to be, they were 770, but now they are 770. They were 770, now we have 534. Is that an increase or a decrease? Is it an increase in doubtful debts or is it a decrease in doubtful debts? Good people, move very fast. Is it an increase or a decrease? It is a decrease because they were 770, but we've been told to do what? To maintain them at 5%, which is 534. What do we do with that decrease? What do we do with it? I told you how to treat it. What do you do with it? We said that it should be added. It should be added to gross profit. I remember explaining this. It should be added there to 36 as part of the income. Any other income? No other income apart from the manufacturing profit that we are supposed to add in here. Remember, that is a profit on its own that went to these people who are doing the manufacturing, the department that was doing the manufacturing. So what was the profit? What was the profit? 6586, 80, 6586.8. So that we get a total of what? 20. We get that total there. Treat it as revenue. Yes, Ngaire. and the cargo earned. That is what we said. But now note here that if we had any manufacturing profit, right, which is money that this department now that is selling paid to the department that was producing goods as a profit, it should again now be all combined in the trading profit and loss account, and therefore we should add it here. That element of manufacturing profit should be added here, because remember, at the end of the day, we want to know the total amount of profit that was made. And therefore, if the production department made some profit on its own, they should allow us to add it there so that we can do these final accounts. I hope that is clear. Next, we less expenses. Less expenses. Can you tell me the expenses that we have? Tell me the expenses that we have very fast. Were there general expenses? Were there general expenses for the office? Were there general expenses for the office? They must be there. General expenses for the office, we have 9470, right? Is it being affected by any other note? Is it affected by any other additional information? No. Somebody is saying no. Have you looked at the additional information number 5? Look at the additional information number 5. What does it say? That there was an accrued general expenses in regard to the office of how much? 764. So here we add accrued office expenses, which is how much? How much do we have here? How much do we have? We have, let me see, we have 764. What will be that figure? 10? This actually should have come here. 9470, 764. It would make our work easier because I would just add it up together to get 10,234. 10,234. Any other expense that you can see? Any other expense that you can see? Do we have any depreciation? Any depreciation? Depreciation? Delivery van. There's somebody who was talking about delivery vans. These were vans that were used to deliver finished goods to where we were selling them. What was the amount of delivery vans? Amount? What is the depreciation? We are supposed to depreciate it at 20%, right? We depreciate it at 20%. What was the original amount because we are depreciating it on cost? What was the original amount? We are depreciating it on cost. Yeah? 81. Good. So what will be the amount? 1620. Thank you. Any other expense that you can see? Have we catered for the office salaries? Do we have anything like office salaries? Good people, I know you are tired. We're almost through. We're almost through. Office salaries? What is the amount of office salaries? 25. Is it affected by any other additional information? Is it affected by any other additional information? $2,500, right? 2,500. 2,500. Any other? Any other? Any other? No. Wages? We have office wages. My friends, what are you talking about? Do you have wages? No, these are sufficient. No, but we have salaries, for these people, right? Do we have salaries for these people? Yes, we have salaries. Salaries are both for, salaries. We have salary for Mary. Is it Mary? And we have salaries for Caro. Caro, if this anybody called Caro, we want to pay you some salary here. We have those salaries. We have those salaries. So how do we calculate salaries for these people? For Mary, it was 10% of what? Somebody remind us. I can remember it was 10%. And for Mary, it was supposed to be 25%. For Caro and for Mary. Mary was supposed to be, no, Caro is the 10%. Mary, it is 25%. Mary, it is 25%. So we said, now those people who are asking, we said that for Mary, it is 25% of what? It was 25% of what? There's somebody who was asking, of the manufacturing profit. And what was the manufacturing profit? So 25% multiplied by the manufacturing profit, which is 6586.8. Do you see that? Should give us a figure of what? 1646.7, if I am not wrong. Can confirm that. Then Caro was to earn, Caro is the one who is earning, I've exchanged this, Caro and Mary. People are very confusing, eh? Caro and Mary, always confusing. They are good girls. They are good students. Good. 10% of 10% of the gross profit. So what was the gross profit? Just have to multiply by that. 10% of the gross profit, which was 19,872, right? To get 1987.2. I hope you are agreeing with my mathematics here. I hope you are agreeing with my mathematics, so that we get 17. What? Subtracted from this. From this figure here, we should be able to get 8706.9. 8706.9. 607.9. Now, I refer you to note number. Let me refer you to note number. Are they sharing this profit? Are they sharing the profit? Yeah, they are sharing the profit equally. Can you see that? They will share that profit equally. They will share that profit equally. From the first statement, Caro and Mary are in partnership, sharing profit and losses equally. So if you want to know the amount of profit, but now for this, call this net profit. In case you are needed to split it, you can split it in equal measure. And you divide it by 2 to give Mary, the amount there, which is 43.53, and Caro 43.53. I want to hope that that is clear. I want to hope that this is clear. Can you confirm? Can we confirm that it is clear so far? Good. Now, I know some of you are tired, but there's a third question there. There's a third question. Should we proceed and do it? Should we proceed and do it, or will you do it on your own? Good people. There is a third question there. There is a third question there. Confirm whether we proceed and do it. Let us try it ourselves. We proceed. Or should we allow those people who want to rest so that the rest of us proceed? We should try it on our own. Let us try it ourselves. Very nice. Very nice. Very, very, very nice. Oh, this is good. This is a nice one. And this is what I will do. This is what I will do. Why don't we do it as an assignment? Why don't we just do that last part as an assignment? Is that okay with us? We do it as an assignment that will be marked and recorded, graded. I want us to do it as an assignment. Yes. Nice. You're saying it is okay. Good. Good. It's the balance sheet. That is what is remaining. We've already done the manufacturing. We have done the trading profit and loss account. Now, whatever was remaining is the balance sheet as at that date. Date of submission, when do you want to submit? Today, tomorrow? When do you want to submit? Next Monday. Next Monday before 2. Next Monday before 2, or you can submit it earlier. Is that okay? Next Monday before 2, or you can submit it earlier. Next Monday before 2, or you can submit that earlier. Good. Good. I'm liking the spirit. I am liking the spirit. And you know, even with attendance, most of you are not able to sign. Very unfortunate. I give you an opportunity to tick it, you are not able to tick it. What is wrong? Anyone who is not able to tick? Good. So let me set it up here so that you can tick it now. And remember, I told you it has specific time. So if you are not here, it will not record. I'm going to give you only 10 minutes. Those people who are not in, those who have already gone, they will be on their own. They will start following me, telling me that, hey, we were in class that day, but you're not here. You're not here. So it will be upon you. So let me put it in such a way that you're able to take it. And no, there's a good size of good number of people who are not in my class today. Very unfortunate. Let me put it in such a way that we are able to take it. But people are saying yes, yes, yes. What is yes? Attendance, yes. My friend Otieno, you've just come in. We've said that that question of Carol and Mary had 3 parts. Part 1 was prepare manufacturing, part 2 was prepare trading, and part 3 was prepare balance sheet. And therefore you prepare the balance sheet. No, 20 minutes, no, I refuse. Cannot open slow on your side and open well on other people's side. How? How? September, yes. Save changes. Good. Now can we record? Who is this Billy? Were you following Azama? You've just come in. Some of you are very funny. Just come in. We've already settled and said next Monday. Yeah? You submit next Monday. Work is supposed to be submitted by next Monday. At what time? At 2. I expect your work. So you're still telling me next Monday. No, the attendance is open now. And you can see Duncan has already marked. Duncan has already marked. So can we mark it very fast? Otherwise, if it locks you out, I will mark you as absent. If it locks you out, be sure I will mark you as absent. Miriti has marked. Ngaire has marked.